Hey guys, so in today's video, we're going to be going over options trading. So I touched on options a little bit in my investing versus trading video, but there's some information I left out. So with options trading, it can be very lucrative. You can make thousands, tens of thousands, hundreds of thousands, depending on your account size. But there's more information you need to know. For investing, you really just need to know the company, what it's trading at, what its past trading has been like, and also how the market is doing. But with options trading, you need to know exactly how far a stock is going to trade up or down, and you need to know how their contracts work. So for options contracts, how it works is you buy a contract, however many it is, and depending on the direction that the stock trades, you make money from either a put or a call. So a put is if you buy options contract and you expect for it to go down, and then a call is if you buy the options contract and you expect for the stock to trade up. So that's how you're able to play both sides of the market. So the way options contracts work is you have a strike price and then you have an expiration date. So every Friday, options contracts expire. So if you're buying a contract for this Friday, it expires this Friday. That means you expect the stock to trade to that specific strike price by this Friday. Or if you buy one for next Friday or a month out, same deal. You're expecting the stock to trade to that price by that time. And the goal is to get it to that whatever price that you're expecting it to get to and take out your money because you don't want to stay too long. Because what happens a lot of the time when you buy options contracts is um, it'll make a big jump to your strike price or close to your strike price because you still can make money if it gets close to your strike price. And then it might reverse back or there might be a pullback. And all the money you lost on the big move, um, or all the money you made on the big move was lost because of that pullback. So options trading is a very active thing. It's not something I would recommend you do while you're doing something else, or um, I definitely recommend you look at the chart while you're options trading. So if you don't know how to read charts at all, I wouldn't get into options trading just yet. So another thing with options trading is you want to be sure to buy the correct contracts. So depending on what stocks you trade, there's some stocks don't even have options, but for the majority of the stocks you're going to be trading, they're definitely going to have options, and they have to be liquid. So when I say liquid, I mean they have to move. You don't want to buy stock. You don't want to buy options contracts that aren't moving, or they're so far out of the money that it would take like a miracle for them to reach your strike price. So what I recommend doing is um, finding out the stocks that are the most liquid. So the Apples, AMDs, the Microsofts, FSLRs, Oxys, especially Oxys. I love trading Oxy. And just focus on those. Like make a little watch list. And I could give you guys my watch list or whatever. I'll leave it in the description. But like make a little watch list of stocks that you know have liquid options. And what that will do is it will eliminate the stress of choosing options contracts because you'll be choosing stocks that are proven winners, stocks that you know are likely to move. So your probability for making money will go a lot higher than if you were to stick to like penny stocks or like small companies that have options, but they're not as liquid. Another thing with options contracts, you don't want to buy very expensive options contracts. You want to keep it pretty low. So for me, I like trading Oxy because their contracts that are close to in the money, which is usually what I buy, are most of the time less than $150. And you could get a few contracts for 70 and it's still liquid enough that you'll make money from those $70 contracts. Especially if you have a small account, it'll help tremendously that you start off trading like Oxys, CVX, X, Steel, like those type of companies. Also, this is a personal thing that I do. I don't mess around when it comes to buying like options contracts. Like I don't really look for the greatest deal necessarily. Sometimes I can if I feel like a big move is coming, but most of the time I just stick to right out of the money. I never go in the money because when you go in the money with the contract, meaning if you're buying a contract that where the strike price is already below or above where the stock is currently trading at. So say you think Apple is going up to $100 and it's trading at 99 right now. If you buy an options contract with the strike price of 100, or if you buy a call with the strike price of $99 and it's already trading at $99, if it goes up to $101, which is a $2 move, the probability that you're going to make a lot of money goes down drastically because it's already in the money. So you had to buy more, you had to spend more for the contract itself, and then because it's lower risk, you're not really making as much as you could. When if you were to buy a little bit out of the money and then it found its way into the money, then you can make drastically a lot more. So for me, I never buy options contracts that are already in the money. The second thing I do is I never buy options contracts that are very, very far out of the money. So if if Apple is trading at $100 and I'm buying a contract with a strike price of $110, I'm expecting a $10 move by whatever expiration date. So say the expiration date is for this Friday. I'm expecting a $10 move in really 5 days. Say I buy a contract on Monday. I'm expecting a $10 move in 5 days. And even if it was to happen, because it could happen in 2 days, like it could reach 110 in 2 days. Um, it's very, very, very unlikely. And what you want with options is so much volatility that you don't want any type of unnecessary risk. You don't want to buy a contract and then it expires worthless on Friday because it just couldn't even get close to the strike price. So because of that, I always stay at least give or take like two two to $3 out of the money because a $2 or $3 move or um whatever percentage move is more likely. Like if it's right out of the money, like it's like one contract out of the money, then the probability of you making money is it goes way up. Like I'm talking in 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 9 minutes off the open, you could literally just make all the money that you would need to make for the day. Like that's how much higher a probability of making money you have when you go a little bit out of the money. So I definitely recommend you guys, do your research. Definitely like allow the information to digest, allow yourself to really understand options trading. Um, I know I share a lot of information just now. Don't expect yourself to like just get it immediately and be on your way. It takes a little moment to digest. Um, but be patient with yourself. Go in your brokerage, wherever it is, whether it be TD Ameritrade, Robinhood, um, and see where you can buy options contracts. See how they work. Maybe even look at the price of some options one day and then check back on it the next day and see how the options contract went up or down depending on how much the stock traded up or down. So also before I end the video, I think I'm gonna go ahead and show you guys how to buy options contracts on TD Ameritrade. All right, so this is TD Ameritrade. This is on my phone. So Um, I have no positions available because I do day trade. I don't hold positions overnight or the weekend because you never know what could happen overnight. Um, so what you do to buy options contracts is go into the search bar, and I have AMD recently viewed. I'll just go ahead, click on that one. You go to AMD, it shows what it's trading at, 68.25, went down 0.5%. Look through, other stuff, whatever. And then up here in the scroll bar, you have overview, charts, news, rating, and then options and level 2. So what you click on options, and then it will show calls on the left side and then puts on the right side. Ignore the bid ads. Like for me, I just want to get in. Whatever it is, I just want to get in the trade. So I'm clicking on the ask almost every time. Not trying to waste time, not trying to like bid and get at a specific price. I personally don't care about all that. I just want to get in and watch it go up or down, whatever it is. So what you have is you have these like dark gray options, and then you have the white ones. And this for December 16th. So 5 days to expiration. So the dark gray means that it's in the money for the calls right here. And then the dark gray down here means it's in the money for puts. So everything in the white is the out of the money. So remember what I said, you likely want to do $1 to $2 out of the money. So if I was expecting AMD to go up however much, more than likely what I'm choosing is the 175 calls down here. I could do the 138 because AMD is a pretty liquid stock. It moves pretty well. So that could definitely be in the money by Friday. But more than likely, I'm going to do 175. And if I'm doing puts, same deal. Probably 164 puts is where I'm going to end up doing. All right. All right. So that is how you could trade options on your phone. Now, I'll probably make another video that goes over trading on desktop, which is what I usually use to trade because um, I use Thinkorswim, which is a desktop platform. And on the platform, you're able to look at the chart and look at the options contracts simultaneously. So you're able to look at it at the same time, and it just helps with your decision making, makes for a very quick transition to trading, and it's a lot safer. You know, if you see something on the chart that you don't like, you can instantly just sell it, like very quickly. Um, Aside from that, if you were to do it on your phone, like, do you have to scroll back and forth between TD Ameritrade and TradingView or whatever charting website? And it's just a lot more difficult. So I do want to say this: do not start trading until you're able to use the desktop version. I definitely do not recommend trading on your phone because you just don't have enough information. You're not able to look at the chart in real time. And yeah, guys, just don't rush into it, But yeah, y'all. I hope you guys enjoyed the video. Um, be sure to leave a like, subscribe to the channel, and I'll see you guys in the next video.